This stock went from almost $200 at its peak to under $1, and on Friday it just exploded 15% in a single session. Beyond Meat, ticker symbol BYND, just printed a massive green candle on the daily chart, closing at roughly 95 cents after trading as high as $1.05 intraday. Volume surged to around 148 million shares, which is enormous for a stock sitting under a dollar. So the real question is this the beginning of a real reversal or just another trap in a long brutal downtrend? Let's break down the daily chart. Beyond Meat, of course, is the plant based meat alternative company that was once one of the hottest IPO stories in the market. Back in 2019 and 2020, this stock was a momentum monster. It ran to extreme highs, fueled by hype, growth expectations, and massive retail interest. But since topping out, the chart has been a textbook example of a long term distribution and downtrend. Lower highs, lower lows, repeated failed rallies. Now, zooming into the daily time frame we are looking at, you can clearly see that after a sharp spike in October, where the stock briefly ripped above $3 and even wicked toward the $4 area, it immediately collapsed. That move was driven by explosive volume, but the follow through never came. Instead, sellers stepped in aggressively. Since that October spike, the structure has been grinding lower for months. Every bounce has been weaker than the last. The 50-day exponential moving average, currently sitting around 90 cents, has been acting as dynamic resistance for most of the decline, and the 200-day EMA, way up near $1.96, is still far above price, showing that the long term trend is decisively bearish. Now, here's what makes Friday interesting. Price has been basing between roughly 66 cents on the downside and about $1.04 on the upside. You can see multiple touches around that 66 to 70 cent zone. That's clear support. Buyers have consistently stepped in there. On the upside, the $1 to $1.04 area has acted as resistance multiple times. Every time price approached that zone, it stalled until Friday. On Friday, the stock opened around 79 cents, pushed aggressively higher, and closed at approximately 95 cents, up 15.3% on the day. And more importantly, it reclaimed the 50-day EMA, which sits around 90 cents. But that reclaim is significant on the daily time frame. It's the first decisive close above the 50-day average in quite some time. But here's the nuance: while the percentage move looks dramatic and 15% absolutely grabs attention, we have to remember this is a sub $1 stock. Volatility is amplified. A 15% move here is only about 12 to 15 cents in absolute price. So what matters now is follow through. Let's talk key levels. Immediate resistance sits at $1.04. That level has rejected price multiple times in the past few months. A clean break and close above $1.04 on strong volume would open the door toward $1.52, which is the next clear daily resistance zone from prior consolidation. Above that, you're looking at $1.95, which aligns closely with the 200-day EMA around $1.96. That would be a major test of the longer term trend. On the downside, if this spike fails, first support is around 84 cents, then 77 cents, and then the major floor at roughly 66 cents. If 66 cents breaks with conviction, this chart likely enters another leg down and potentially risks exchange compliance issues if it can't sustain levels above $1. Now, let's talk structure. The daily chart has been compressing, lower volatility, tighter candles, volume drying up through January and February. That kind of compression often leads to expansion. Friday could be the beginning of that expansion phase, but one day does not make a trend. From a bullish perspective, the argument is this: prolonged downtrend, extreme pessimism, heavy short interest historically, price basing near lows, and now a high volume reclaim of the 50-day EMA. If bulls can push this through $1.04 and hold above $1 on pullbacks, momentum traders could pile in for a squeeze toward $1.50 or higher. From a bearish perspective, this is simply another lower high forming beneath the 200-day EMA. The long term trend is still down, the stock is still under $2, and until it proves it can build higher highs and higher lows on the daily time frame, rallies are suspect. Personally, what I am watching is the behavior around $1. Psychological whole numbers matter, especially for low price stocks. If this can consolidate above 90 cents and build a tight flag under $1.04, that sets up a cleaner breakout attempt. But if we see immediate rejection back under 90 cents with volume fading, that tells you Friday was more of a reactionary spike than the start of a sustainable move. Risk management is everything here. Low priced stocks can move fast both ways. If someone is trading this for a breakout over $1.04, invalidation likely sits back under 90 cents or even under 84 cents depending on risk tolerance. You never want to hold and hope on a stock that has already shown it can drop 70, 80, even 90% from prior highs. The bigger lesson from this chart is about trend respect. Catching bottoms feels exciting, but the daily chart reminds us that the dominant trend has been down for years. The 50-day EMA has consistently rejected price. The 200-day EMA hasn't even been tested recently. That's not strength, that's long term damage. At the same time, extreme downtrends can produce violent counter trend rallies. Those rallies are tradable, but only if you understand they are counter trend. So, heading into next week, all eyes are on $1.04 overhead and 66 cents below. Breakout or breakdown, expansion or fake out. If you're watching Beyond Meat, don't just focus on the percentage gain, focus on structure, volume, and level to level movement. That's where real edge comes from. If you found this breakdown helpful, make sure to like the video, subscribe for more daily chart analysis, and drop a comment below. Do you think Beyond Meat is setting up for a squeeze back over $1.50, or is this just another bull trap in a long term downtrend?